So, my name is Andrew Beaney, and I'm the MD of our oil and gas business in the Middle East. And I also look after some of our other associate businesses in Qatar. Just to share a little bit about myself, I was actually a sponsored undergraduate of Interserve back in 1988, and I remained in the UK. I worked through the UK construction businesses, and I got to the board of the UK construction company in 2008 and looked after our UK regional building business. In 2011, I went to Qatar to look after those businesses there as part of the strategy to expand internationally and also to exploit some of the opportunities that we could see in the Middle East. So, we started our journey in the industrialised support services in Qatar during 2006. This led to the acquisition of Medina in 2007, where we grew a small fabrication-only business into what is now a diversified term maintenance, shutdown, and EPC business. Qatar saw rapid growth as we got involved in one of the largest global industrial city developments at Ras Laffan, which is on the northern tip of Qatar. And it's alongside, as many of you know, the very large gas field which Qatar has enjoyed to develop its wealth. And the picture you can see is one of these massive plants at Ras Laffan in the industrial city. It's a nighttime shot there. So here we have an extract of a map of the Middle East showing our principal facilities. So we'll start off in Qatar. We operate from fabrication facilities in the industrial area and from within the Ras Laffan complex in the north, where we're quite close to the oil and gas company assets. In Abu Dhabi, we've got two fabrication yards in the Musaffa industrial area. Both of these have got quayside and heavy loadout facilities. And remaining in the UAE, we've also got a further fabrication facility in Fujairah, which is focused more on the port of the Gulf of Oman and the oil and gas storage facilities that are there. In Oman, we've got our head office in Muscat, where we operate our transport and logistics business, but the other locations, which I'll try and point out on the map here, are spread out all over the place. So just to give you some idea on scale, Salalah is down here, and from Muscat to Salalah you're talking about 1,000 kilometres. And a lot of the oil field concession areas are where we have our fabrication and camps. So right up in the north, we've got Safa and Wadi Latham. In the middle here, we've got Fahoud. And then as we head down, we're into Makaisna, where we provide our support services to the oil and gas sector. We manage the business in four segments, and that reflects the differing margins, the risk, and the overheads associated with the work that we do. You can see the relative size of these businesses as shown in the pie chart in the centre. Our EPC, which, in case you don't know, that's engineering, procurement and construction projects, are focused on the smaller offshore brownfield sector. We actually saw a gap in the sub-£30 million EPC market where our larger competitors, such as Petrofac, don't tend to target. And for this segment, we get involved in the design as well as the procurement. And this is quite different to the fabrication only, as on these projects, we tend to have free issue materials and we don't get involved in the design, so it's much more about managing our labour and the productivity. Fabrication and construction is by far the largest part of our business and is actually the backbone of what we do. However, this is very much the key capability required for our next segment, which is operations, maintenance and shutdown. In Abu Dhabi, we have a large workshop facility where we maintain pumps, valves and motors for the Abu Dhabi National Oil Company, otherwise known to you, you probably hear it as ADNOC, and some of the other original equipment manufacturers, or OEMs as they're referred to. In Qatar and Oman, we provide term maintenance services for the assets like Qatar Shell's gas-to-liquid plant and in Oman on their LNG plants. Finally, we have our support services, which includes our training businesses in Oman, which is called the Occupational Training Institute, and in Qatar, the International Safety Centre. We also have our non-destructive testing in Qatar and our rig moving and logistics contract in Oman, where we transport all of Oxy materials from the port to the interior, and we use our fleet of heavy oil-filled trucks to move the onshore drilling rigs. I'll start the review of our individual businesses in the reverse order. So we'll start with the most recently acquired. So progress since the acquisition of Adyard in September 2013 has been positive. The Interserve policies and procedures have been embedded, focusing on efficiency and minimising waste, and the yards have now all been reorganised to create much better work. A number of recent project awards has actually generated almost 50% increase in our turnover, and the market in Abu Dhabi remains strong. And coupled this with our ability to fabricate modules and load out onto barges, it actually allows us to open up to a wider international market. The pictures actually show our facilities in Abu Dhabi. So this one on this side, you can see where we've got the quay side that's on two aspects of the yard, which opens up our capability for fabricating modules and shipping them around the world. But the added benefit is that actually in the Gulf, there's over 100 drilling rigs, which all have to go through a regular maintenance cycle. One of those you could describe as like a car with an MOT, and they have to come in to a yard such as this to get their regular service and overhaul. The picture on the other side is our Liwa yard, and you can see from the picture there that these guys look quite small by comparison to what these giant structures, which are the top sides to some of the offshore platforms. And those will actually be sailing away shortly to go to the Indian Ocean. Moving on to Toco, we've now completed 2.5 years since we invested for the growth that we'd identified there at the time of the acquisition. Toco actually had a very heavy reliance on Occidental, and we've now broadened that client base to include BP on the Kazan tight gas project and Orpic, which is the Oman Oil Refineries and Petroleum Industries Company. There are further major opportunities with PDO, which is Petroleum Developments of Oman, across some of the largest concession areas in the interior of Oman. PDO are by far the largest oil producer in Oman. In 2014, we achieved just over £60 million revenue, which was actually 29% growth on our first year of trading. And we've also got a good pipeline going forwards into 2015. And while some of the new investments in oil and gas production have been cancelled or postponed, Oman is heavily reliant, as Colin said, on oil exports to fund the massive social infrastructure construction projects which are already underway in Oman. And this has meant that Occidental of Oman has continued to drill their wells across the concession areas to which Toco construct the flow lines, the pipelines, and all the stations which are needed to export the oil. So these pictures here show us working in the desert. This is a typical remote location up at Safa. So you can see the orange-coloured sand dunes. And this is our equipment laying oil flow lines. And then in addition to that, the support, you can see there one of our rigs, which is a heavy oil-filled truck, transporting one of the onshore rigs which are needed for all the onshore wells that have been constructed in the concession areas. Medina is our most mature business, and as Qatar continues to deliver its vision for 2030, the demand for energy for the rail, transport hubs, and the other social infrastructure continues to grow rapidly. We've built a reputation with the asset owners like Qatar Petroleum and Shell to be a safe, reliable provider of the maintenance services, as well as shutdown, turnaround, and other mechanical and civil construction projects within the industrial plants of Qatar. We've also been working with a company called Qatar Solar Technologies to build the first polysilicon plant in Qatar as it develops a more sustainable approach to energy consumption. It's also noted that some of the downstream petrochem projects have also been suspended, and the moratorium on exploration of the northern gas field has remained in place. However, Medina has built a very good reputation in the marketplace for providing a safe and reliable maintenance service. And as was said by Colin, they need to continue exporting the gas. So these plants are literally running at full tilt and require constant maintenance, overhaul, and generally looking after. Our order book is much smaller than the other businesses due to the nature of the work in Qatar. So whilst in Oman, we've got a three-year oil field construction services, Medina tends to secure smaller, shorter duration projects, which keeps their order book low. For example, we're one of two projects contractors with Shell, where we provide projects to the major plant, but there's no visibility of that work. So whilst it's a 3-year term contract, we can't book the forward orders. We're well on our way on the journey to integrate these businesses to leverage the wider capability and also generate some operational efficiency through the shared services. We've looked at these opportunities and we've appointed heads of function for services like the business development, estimating, quality, health and safety, commercial, and HR. And we're now looking at IT and finance with a view to a common ERP platform to support it all. So instead of having 3 functional heads in each business, we now only have 1 with more junior staff in the local businesses. And this has reduced our cost base. So as we've acquired the businesses and we've integrated them with the management, including our processes and our systems, we've been able to convert opportunities with a success rate which is roughly 1 in 4 by value. And this has seen our order book grow significantly year on year. We've seen a 60% increase into 2014 and expect that trend to continue into 2015. Our customers seem to like the wider and larger backing of Interserve on these businesses, which has been good for us. As I mentioned with Medina, their visibility is shorter, so this highlights the strength of the order books in both Adyard and Toco. So I'll just give you a sample of some of the projects that we've got in hand. Saab 4 is 12 process modules for Abu Dhabi National Oil Company, and this is on the Zirku Island facilities. It's an EPC project for Hyundai Engineering and Construction, and it includes for 14,000 tonnes of fabrication, which will be complete in June 2016. The Zadco ESP is also in Abu Dhabi, and it works to the 5 offshore platforms in the Zakum field. This is also due to be complete in June 2016. MSPP is the Muscat-Sohar pipeline project, where we're laying 227 kilometres of 18-inch pipeline from the Sohar refinery to Seeb storage facilities, and that's near the airport. This project's due to be complete in 2016. We were recently awarded the gas export pipeline for the BP Kazan project. This is 60 kilometres of 36-inch pipeline, and allows the gas to be piped from the interior of Oman to the port. It's due to be complete in November 2016. Our works with Shell for maintenance services on the gas-to-liquid plants continues all the way through to 2017. And in this picture, which is at Makaisna, you can see where we undertake some of the services for Occidental of Oman. You can see how close the wells are, so it generates lots of work for us hooking them up and laying the flow lines. You've got to bear in mind that these are remote desert locations where the temperatures reach 50 degrees, and we have to build and operate our own camps for our staff and our workforces. It's actually a really long trip, so when I visit some of these remote locations, some are at least a 5-hour drive away, and that's from Muscat, or we even have to get a plane to fly from Muscat to land on a desert airstrip. And generally, it's too much to do that trip in a day. So I've spent many a night in one of our camps in the desert. There's not much to do, though, because you're 200 kilometers from anywhere. And there's no alcohol. So based on the current pipeline of known projects, we forecast that some $36 to $37 billion worth of contracts will be awarded in the GCC oil and gas sectors in 2015. The spending will be led by the Lower Fars in Kuwait, shale gas in Saudi Arabia, the Ruwais refinery upgrade in Abu Dhabi, and the tight gas scheme in Oman. So we remain confident of a sizable market going forward, and a lot of these will be smaller in size, but there'll be more of them. So it'll actually be a better fit for our business. If we summarize the key market trends and how our oil and gas customers have responded, it allows us to shape our strategy. Cutbacks in discretional or non-essential spending has forced our customers to put much greater emphasis on operational efficiency, so hence our focus is on operational maintenance. There are fewer greenfield new or mega projects, creating more competition and margin pressures. So we're focusing on the lower value brownfield essential capital projects. And with such low gas prices, some of the LNG projects have been delayed or cancelled. Gas is needed in the Middle East for power generation and desalinated water. And with rapid population growth, it means that our focus is on the brownfield LNG projects and maintenance. Other sectors have benefited from the lower commodity prices, which has seen more power and other infrastructure projects get some funding. So we can use our transferable skills to look at other projects outside of the oil and gas sector. So, overlaying our previous order book slide with the yearly revenues shows that back in 2012, we had annual revenues around £60 million and a £50 million order book. This was when we just had Medina, and as I said before, the visibility was on a shorter horizon. In 2014, we secured an order book that increases our starting point by more than fourfold and completed revenue of £200 million. This is not just the addition of the newly acquired businesses. This is significant organic growth on top, and we've got plans to continue that growth. The GCC market over the next 3 years has some £85 billion worth of spending, which is based on our current capabilities, will provide us with £13 billion worth of addressable opportunities. These are projects that we could participate in, but we may lack capacity, local presence, or a track record. So we've currently tracked £2.8 billion worth of prospects, which we've marked as strategic target or a real prospect. We already have £800 million worth in a state of expression of interest, pre-qualification, or we're actually at tender stage. And as I said, our strike rate by value is healthy. So if we keep our success rate at 1 in 4, we're confident in our ability to deliver our plans. Whilst we can see opportunities in our existing markets, we're not satisfied to just leave it at that. As Saeed has just shared with you, we have a newly formed business and joint venture in Saudi Arabia. We need to fully understand these markets for oil and gas services, and we'll assess our routes to entry over the medium term. But just to give you a flavour, in Saudi there are some very large projects. There's maintenance and shutdown for Saudi Aramco and the SABIC industries. There are tank fabrication and erection packages, as well as mechanical and piping on various projects. Just to give you a couple, there's the Jazan export refinery. I'll get the pronunciation right because these are a bit difficult to pronounce. The Al Fadhili gas plant. And then in the Empty Quarter, South Goa and Jafara, there are a number of tight gas projects. Saudi Aramco's CEO announced in January this year that the company plans to invest $30 to $50 billion a year to maintain its crude oil production to a level that makes it the world's largest refiner. And the other area which we've highlighted on there is Kuwait. There are a number of term contracts. There's a 5-year one with PIC, which is the petrochemical industry company. And similarly, with the Kuwait National Petroleum Company, KNPC, another 5-year term worth another $150 million. There are also a number of projects that we could bid for using our UAE facilities. So as I say, we'll explore the market entry options over the medium term. So to sum up and re-emphasise the points, the growth in our oil and gas services has been good since we made the acquisitions. We've seen little or no impact on our business through the low oil prices. We're maintaining our focus on operations and maintenance, and we're targeting the brownfield operational capex. We're looking at new markets in Saudi and Kuwait, and we believe there's still plenty of room for growth. So I'd just like to thank you all for listening, and I'm sure between the three of us we've generated a number of questions which we'll be very happy to answer.